Hello, Oracles. Welcome to our Thursday night live. We are going to be discussing lots of fun stuff that happened this week. We've got some Broadcom earnings that happened today. They increased their dividend, which was pretty cool. But Tesla, that's the big one. Tesla breaking to new all-time highs. Very exciting there. Cryptocurrency is still kind of bouncing. Bitcoin's bouncing around that $100,000 mark. But yeah, Tesla hitting all-time highs again, pushing up. We'll kind of discuss today where it could potentially go from here, because now we're kind of in uncharted territory. So where do we go from here? What levels do we think we're going to be able to get to? Do we think we're going to see a pullback? We'll discuss a bit of that going on today. And from there, and then Sith Lord, I think it's time to put a retirement revised on Tesla. And I have not done a stock price assessment, and I haven't done an earnings report update in quite a while. Basically over a year since things went down with my job and me having to move a couple of times in the last year. Haven't really had the time to go through that and do a full true analysis on what my price targets are for Tesla or anything like that. And typically when I do a price target analysis, I can do the next 10 years, and then you can easily do a video based upon, where I think the price targets would be, and obviously complete speculation. But based upon the price targets, I think that the stock would hit where you could potentially get to retirement for in your own portfolio based upon the number of shares you have, accumulation of those shares over the time. So of course, there's so many different factors that go into it. Could, do we get a recession next year or not? Could be, unknown. If we get a recession, all bets are off. And, then you could double or triple up the shares that you have, depending on how far we pull back. And that could speed up the process for you. So lots of unknowns, but it's still fun to do. And that's one of the reasons why I did it. Was it's fun to look at these potentials that are out there. But when I did them, it was always a, just remind yourself that this is complete speculation. And the reason I had stepped away is because it was all speculation. I had so many other things going on, and it was very time consuming to do a full breakdown analysis of all of the earnings reports for the future, to be able to come up with these price targets. Now that I'm kind of getting things back in order with my life and everything else that's going on, I should be able to get time back to do that. So it's not a bad idea, Seth Lord. Give me a little while though. Give me some time on this. It may be a couple of months, just because I do have to get where I'm at right now in my studio. Literally right in front of me where we're looking is going to be a full kitchenette that I need to have put in. So I have some things that still need to get done for the house. And my son is now home from college for the next month. So obviously I'm going to be spending as much time with him as I can. But that's not a bad idea. I'm going to write that down on my list. And I know a lot of you guys, actually, I'll probably bring it up on the live stream today. There's a lot of different stocks that you guys had asked about. And I'll bring them up today and do a quick analysis on them. At least, when it comes to gaps and just chart analysis. I don't have time to dive into the companies on a live stream, but I'll do a quick stock chart analysis on them for you. But I will put down on here retirement video for Tesla. Beautiful. That is now on my to-do list. What's going on, Lang? Wow, I am tired. Lang, what is going on? Dean, is your 2024 end of year price target still 11.28 per share? No. My price targets were changed, and actually 11.28 was pre-split. So at least it should have been pre-split. God, if I was thinking 11.28 post-split, I'm absolutely insane. But if we're doing so 376, if we're doing post-split, that would be 376. We're clearly higher than that right now with this massive run into the end of the year. So that would have been very bearish if I had a 376. Now, of course, we still have a few weeks left of the month. Who knows what's going to happen over the next few weeks? We did see a little bit of a cooling off today in the market, but it's been very hot, so I'm not too concerned. So no, I haven't done price targets. And honestly, I could just generically whip out, off the top of my head, basic stuff, what I think we could have for price targets going forward, but it doesn't do it justice, and it's not fair to you guys for me to just pull numbers out of thin air without actually running true numbers with a whole valuation model behind it. It's not fair to do to you guys. So I mean, like for instance, Peggy today had discussed how he needs Tesla to 5x for him to be able to basically give his boss the middle finger. And a 5x from where we're at right now, based upon what I had from my previous valuation models, that would be right around the 2035 mark based on fundamentals. But then when you start looking at how sentiment for Tesla, as we can see, swings the stock price a lot in both directions. And we can pull forward a lot of those future earnings. Like right now, pushing up to the levels that we're at around that $420 mark, you're looking at, realistically, this is now pricing in Tesla definitely having a 30% year over year growth when it comes to vehicles next year, having that Model Q coming out next year. Yes, it's the Model Q is what we are calling it. So the Model Q coming out next year, going 30%, that is based on that. That is based on FSD getting solved and not going into cyber cabs, but at least at the point where people can go around doing unsupervised driving in their current vehicles. That getting solved next year is another big piece of it. So we're pulling forward a lot of things that haven't come to fruition yet. There's a very good chance that they will come to fruition, but by pulling that forward right now, eventually you're going to get to the point where, like, all right, we've pulled it forward. Now Tesla actually has to come through on the back end of this. If they don't come through it, you get a massive stock sell off. If they do come through with it, then you're going to just get a flat stock price, because then you have to then pull forward the next year's or the following year's prices and all the earnings and estimates. So it kind of keeps on playing around like that. And so it's one of those things where, I just want to see where the stock's going to go. And I do think I'm going to start adding to it again. I'll show you guys my spreadsheet. Sith Lord, thank you. I appreciate that. Yes, that will go towards the fund, and I'll absolutely get this done for you guys. But yeah, so I'll bring that up a second. So that's kind of where I'm at now. Is I'm going to be adding again, but if we keep on having the stock price run the way it is, we end up running flat. Just because we need to catch up to that. And, there's only so much further ahead you can pull it. And, as Gary Black said himself, at this point right now, in uncharted territory, Tesla could theoretically push up to that $478 mark. Now, for him, that's based upon Tesla having that 30% year over year growth next year. So this is, of course, looking 12 months out. This is Tesla solving FSD next year as well, having that unsupervised self-driving vehicle out there, having those two things come to fruition next year, putting a PE ratio on it of about 145, which isn't unrealistic because we've seen it in the past. But my thing about it in the past, and I love Gary, he's one of my favorites out there. My thing about it in the past is when you put on there a PE ratio of that height, of that size, on a company that is now getting to the size that Tesla is at, I'm not going to argue with the fact that Tesla has a lot of other things going for it. Energy optimists, cybercabs, all of that for the future is awesome and can, just completely blow out of the water anything we're already currently seeing from automotive side of things. But it also needs to come to fruition. And we've seen it happen before. And when we got to those levels, what ended up happening? It got squashed. Now, the reason it got squashed before was strictly because of the fact that Tesla wasn't anywhere near solving FSD, so it wasn't anywhere near being looked at as a tech company. So it was more realistic, especially when the rates got cranked up, that when those rates went up, Tesla was now basically only generating revenue from automotive. And because they're only generating from automotive, they had to be valued as an automotive company. Now we're kind of getting to the next point where, is Tesla an automotive company or are they more? Obviously, FSD getting solved means that they are more. And then we'll push up from there. So again, that still needs to come to fruition, and they still need to actually generate revenue from this. So having FSD get solved is great, but what is the take rate going to be on it if Tesla ends up solving it? Is that actually going to increase significantly, or are we going to be waiting for the cybercab revenue to actually be coming in to really kind of give us that true impact of what the FSD solved piece is going to give and add to Tesla stock? Still a lot of unknowns. I think it's all great unknowns. I think these are phenomenal things going forward. It's just a matter of, what are we actually going to be seeing and timing wise of all of this. Costco up above a K, yeah. Dropping a little after the earnings report. Yeah, Costco breaking $1,000. And Costco is one of the companies that I own that is on the split watch list. So obviously hitting $1,000, there's a good chance Costco is going to split. Do they do a 5-to-1 and go down to $200? Do we wait and see what's going on? But they're definitely on the split watch list for myself. Cintas for me was a big one earlier this year that split. Totally unexpected, but they split. I did own Cat and Eli Lilly. I sold those two off. They were also on my split watch list. I also had United Healthcare on that list, and I just sold off United Healthcare this week based upon everything that was going on. And on top of that, looks like the government is really starting to scrutinize a lot of these healthcare companies and kind of working on cutting out that middleman, which could cut down on their profits significantly. I think they're still think you're going to be fine, but for me, it's a game I don't want to play with, so I stepped out of it and sold out of that one. Tesla Model Q, how much does it cost? Any idea? So as of right now, it looks like they would be targeting sub $30,000. So I would guess in that $28,000 range. The bigger question that we're going to have to face next year is what's happening with the EV tax credit. Is Trump going to come in and squash that altogether? If that happens, obviously, any other competition that's out there right now that is still losing money but wouldn't be losing as much money with the EV tax credits would just now completely be bombed and destroyed because they have nothing coming in that's going to offset any of the losses they're taking when it comes to their EVs. Tesla doesn't need the EV tax credit, but we would then go from vehicles like the Model 3, where in some states you can get it as low as $22,000 to $23,000, where now all of a sudden you're going to have a $28,000 Model Q coming out, and that's going to be the lowest priced vehicle because there are no EV tax credits. Now, there may still be a bunch that are going state by state. Like here in Connecticut, we do have a tax credit that I can get on vehicles here. And there's a bunch of other states who do even better. I think Oregon's one of them that does a great job. But when it comes to the national EV tax credit, you would lose out on that. So that's the big question. Now, if they don't get rid of the EV tax credit and they have that $28,000 vehicle, going state by state, there are some states you could possibly get that for under $20,000, which is now breaking into that total addressable market that is huge. It's like a 3x of what the current market is for Tesla right now. So even getting into the sub 30,000 is still going to be huge. So it's just a matter of waiting to see how that's going to go. But the cost should be about 28,000, and the manufacturing process is going to be the big piece behind it. So it's basically going to be, as far as we can tell, basically like a hatchback version of a Model 3. And then the manufacturing process is something they're going to start working out. And then they're going to eventually switch over, I think, at least the Model 3 and Model Y, maybe all of their production, all of it over to this new production style, which is going to cut down on costs significantly. So then you start looking at the margins and you can say, okay, well, a Model 3 selling for, $35,000, but we're making it for 32,000, we're making maybe 10% margin on it. Now all of a sudden we're producing that vehicle for $25,000 and the margins go up significantly. And then Tesla gets that pricing power back. And that's really where it comes down is, are we now going to be having significantly more pricing power? Because Tesla obviously lost a lot of that over the last few years with interest rates going up. But by Tesla having that pricing power coming back, there basically wouldn't be any competition anyway, especially if the EV tax credits get taken away. But when you're looking at like the Chinese market over there, where they do have some real serious competition, they can get some of that pricing power back and start to compete again as they had in the past. Do you believe Tesla is in FOMO or window dressing? I think it's a little bit of FOMO, but I think some of it is justified FOMO, strictly because of the fact that we are most likely going to be getting that Model Q in the first half of next year. Timing wise, I don't know. They did say first half. My prediction is it's going to be announced at the annual shareholder meeting in June. So we'll see if that actually plays out. And it would most likely be like June. They probably announce it in June and then going on sale maybe beginning of July. So July 1st would be my guess, because then at that point, it would be basically the second half. So that'd be, the first month of the third quarter. So July would be the first month of the third quarter. That's my guess. I don't know. Maybe they actually come out with it sooner. Maybe it's going to be in beginning of Q2 and we actually hear about it. Maybe at the earnings report. Then I don't know. Maybe we hear about it in like March or April. But my guess right now is going to be we actually get the unveil at the annual shareholder meeting. Actual release date for the vehicle is going to be in July of next year, and they'll probably be at the point where they probably have a whole bunch produced. So it's not going to be a still like a Cybertruck type thing where they're going to announce it, and then a lot of people are like waiting for it to get produced. I think they're going to have a whole bunch of these cooking up already, and so once they announce it, they can start delivering immediately. Thousands of them right off the bat. Raymond, any comment on owning TSLL and TSLA? Um, so Tesla, obviously Tesla stock itself, I'm not selling anymore. I sold all that I wanted to previously, adjusted my portfolio as I did, and now I'm back to accumulation phase when it comes to Tesla. Now, for you guys who don't know, I didn't sell off everything. I still have a significant chunk of my portfolio. My IRA, I sold nothing. Actually, I sold a couple of shares very early on in my IRA, but I haven't sold anything since then. And then I have a lot of ETFs that all have Tesla in it. My 401k heavily into Tesla, my HSA heavily into Tesla. So I'm heavily exposed to Tesla in many different areas in many different ways. TSLL is one that where we're at right now when it comes to Tesla, I would probably avoid it just because TSLL is highly leveraged. Obviously, that would have been something like a TSLY is what I just bought back into right now. So right after the election, I jumped into TSLY, and I'm doing that just for income purposes. So TSLO would have been very similar to that. Obviously I could be wrong. Maybe Tesla runs up to $700 and I'm way off on all of this. But that to me seems very unrealistic right now. I think right now, based upon where we're at, based upon the sentiment, FOMO momentum, and all of that, I think there's a lot more downside near term downside risk than there is upside potential. So I'd be careful with TSLL. Yeah, exactly. TSLL is high risk, volatile, high gain when Tesla goes upward. So, obviously anybody who owned TSLL prior to the election is doing extremely well right now on it. But right now, based upon how much we've run up, I'm just waiting for the cool off. I'll bring up looking at the charts here, closing at 418. We pushed up to that almost $430 mark, but then cooled off today. So this is one of those, we're hovering here. And again, I've gone over the gaps, a ton of gaps, and the biggest jump here down to 218. This is one of the things where I'm looking at if we get a recession next year, and this sell off could start in January, could start in February once we get jobs numbers for Q4. If we start seeing signs and the market is not liking this, Tesla's not going to be immune to it. We could come down, and I think very quickly come down and fill this gap at 218. So 218 could be a buying level that we see again next year, especially if the market goes poo-poo and gets ugly. And then depending on how ugly it gets, we could come back down and fill that 147 gap. So if it's a really ugly recession, yeah, I mean, you guys might think it's crazy, but don't forget, we were at these levels right here at this 414 level. We were at almost the exact same levels and then came down to 100. And, a lot has happened, but Tesla basically has shown no growth over the last year. There's a lot more potential in closer near term when it comes to vehicle deliveries, the Model Q, FSD, and all of that. So there's a lot more, substantial foundation under Tesla right now than there was back in 2022 when it all crashed, but it still happened. So I never ever want to take anything like that off of the radar as a possibility. So I do think down to this 218 level, strong possibility for next year. And then depending on how ugly it gets, could get down to 147. And I know I piss people off when I say that, but it would be a shame if people didn't take a look at the potential downside risks. You've got to always pay attention to the downside risks. And you don't have to act on those things. You can just say, hey, I understand that they're there. So if the stock pulls down to those levels, I'll understand why it went down to those levels. That's good. It's one of those things we dealt with previously when Elon was selling his shares. And the stock just kept coming down and coming down. It is, hey, it's okay. The stock is a very volatile stock. It's going to move a lot in one way or the other. And as long as you understand it, that's cool. Some people want to swing trade it. You can make some great money swing trading it. You can play those leveraged ETFs that are out there, the TSLLs of the world. You can play the TSLYs by trying to time where it's going to be on selling and buying high and low. You can do that. Tesla's relatively easy to track how it swings. It really isn't all that difficult. I mean, predicting us getting to this, all-time highs again was super easy. As soon as Trump won the election, we saw the way it was moving. We're like, all right, well, this is all we need to break through. Is a piece of cake. So it was a no-brainer seeing that we were going to get to these levels. Now we're in a little more uncertain territory. Now it's all right. Now we're going to kind of track along with the macro environment, what's going on here. We've kind of got to this new level and now we're kind of floating. It's almost like you broke through the atmosphere and you're into space and now you're floating. And now we're waiting to see what's going to happen. Let me see here. Lang, I think government Doge needs to make insurance companies and hospital and pharmaceutical industries more efficient. Yeah, and cost. Well, I'll get in a second. And cost to all people, Medicare and private insurance companies, USA healthcare costs are miserable and inhuman. I'm not going to disagree. I joke around and I say things like, I pay $6,000 a year to have the privilege of paying $5,000 for a deductible so that I can have my insurance actually cover something that's going on. So, in order for me to have anything covered for myself that I need to have done, I'm basically paying $11,000 a year out of pocket. Now, I haven't had anything done, so I'm still paying that $6,000, and I get the cheapest plan out there in my HSA plan. And actually, let me run the numbers because it just went up. So 35. All right, so I apologize. I was adding in what I actually pay extra into my HSA account because I do put extra into there to use it as sort of a tax-free retirement account, but it's also there to cover any of these deductibles because I don't want to have to shell out $5,000 for a deductible. So it's about $2,000. So I'm still paying $2,000 every single year for the privilege of being able to pay an extra $5,000 to be able to have anything done. So it is kind of a joke. And there's a lot of people who are just like, well, I don't have the kind of money to pay the deductible, so forget it. Now, Aflac accident insurance is helpful in situations like that, but that's still paying for more insurance for a just in case. So when it comes to Doge to make it more efficient, I don't know as much as, and again, this could be speculation, this could be conspiracy theorist type talk, because I don't know enough about the insurance industry. I know enough people in the industry to know that some of this does kind of play out, but there's a lot of, I don't want to, sort of corruption type stuff that's going on out there. Similar to like lobbying when it comes to companies who will, donate money to a certain political party to be able to get things done in their way. There's a lot of manufacturers of pharmaceuticals that go around to doctors and say, hey, I'll give you these kickbacks if you promote this drug for me. And then there's a lot of underlying like lawyer type things. And you always kind of ask yourself, like, where do the prices come from? Where does it all stem from? And are they charging this much because of potential malpractice and lawyers that they have to have? So then why are lawyers charging so much? And there's a lot of all of that underneath. And of course, I don't know all the specific details, and I'm not saying all of them are shady, but that is kind of like the industry that they're in. And I always look at very logical things like, well, if they truly wanted to look out for our health when it came to insurance companies, why is it that I can't use my HSA money towards buying fruits and vegetables that are good for my health to prevent any diseases, but I can use it to buy drugs that have horrible side effects? Now, like, that's always been my question. If they truly wanted to look out for the best of our health, they would allow us to use it on things that could prevent our health rather than using it on drugs after we've already had a problem. So I don't know if they're going to dive into that in that regard. It would be nice if they could. We'll have to see what goes on there. But yeah, it's definitely could use some reform in the healthcare field here in the US. What else we got here? Yes, TSLA can fall fast and keep falling. Yeah, we're 414. Yep, exactly. Now keep DCA back to 420. Yeah, I've been DCAing. And so I'm now at the point where I'm building my portfolio. I'm consolidating a lot of different things in my portfolio and bumping up the levels that I want all of my different stocks to be at, which by consolidating, moving to the next level, speeds up that process to get more added to Tesla. Obviously, Tesla running as fast as it is, it's gonna be hard to catch it. But as I said, I do think we're gonna cool off. I think we at least come down to that 218 level next year, which will give me a lot of opportunity to add as it pulls down, because I'm also building up my cash stockpile and my cash flow. And again, this is something I have been discussing over the last year and a half. Is that was my focus. I think we're going to get more opportunities for Tesla. Obviously, massive run right now, but by building up this cash flow and this cash stockpile, when we get that next dip, then I'll be able to add more into it. And if we don't get the dip, shame on me. I miss out on that. But again, I'm still highly exposed, so I won't be missing out entirely. When FSD goes unsupervised, will Tesla have to cover insurance cost when FSD active? Maybe Tesla can have FSD surcharge on top of its $100 subscription. So that's one of the big things, is because when you go level 4 and level 5 autonomy, and anybody who owns a vehicle now would be level 4, because there is a steering wheel and pedal, and you can take control. Level 5 is no pedal, no steering wheel. And so the question would then be like, I think that's really what it's going to come down to, is Tesla assuming the costs and insurance on all of this would then mean that we're definitely at that level 4. Because if we're now trusting Tesla's technology to do the driving, you're no longer the driver. So then my question is well, you would still have to have a driver. The insurance is going to be interesting on it, because obviously you still have the ability to drive, so you would still have to insure the vehicle yourself. So, but Tesla does have that technology to know, was it an FSD? Obviously, we've seen it already when it comes to all the NHTSA reports. Was a full self-driving engaged when the accident occurred? So, that could definitely play into it for sure. And, whether there's a surcharge or not, I don't think so, but it'll obviously make it a lot easier if you have Tesla insurance, and if you're in one of those states that does have Tesla insurance, because it's all going to be a seamless process. Tesla will have the information, and they'll be able to disclose all of it. And that if there are any issues that they have to get covered, everything's through Tesla. You don't have to worry about third party stuff. It'll be interesting to see. And I'm curious if they're going to do the flat rate fee as they currently have it right now, or if they're going to go to a 100% subscription only based model once they do end up solving FSD. I think that's going to be the route they go, because once the take rate is at a point where they don't need the lump sums coming in, and I don't think they really need them right now, but some people are choosing to get it because it's not solved yet. But I think once they do have it officially solved and you can get truly level 4 autonomy, I think they're going to go strictly subscription based on all of them, which it does make it easier too, because anybody who's buying a new vehicle, you don't have to worry about, oh man, now I've got to shell out another, $6,000, $7,000, $8,000 for whatever it is for FSD. It's just going to be like, all right, well, I was paying $200 a month before. I'll just now continue paying $200 a month in my new vehicle, and it'll be a seamless transition, and people don't have to worry about losing out on that money. What's going on, Hanif? If healthcare is expensive, why not date or marry a Canadian? So actually, I don't know how. Well, so obviously, if you're living in the U.S., that doesn't do you any good. And there's obviously a ton of countries out there that all have universal healthcare. So yeah, I don't know. I was just, when I was in Canada visiting my friends over the summer, we were discussing some of that as well, and it's like, and as somebody explained it too, is just trying to explain it to the American public right now, is the difference between 2 and 8. And 2 is a lower number than 8, obviously, smaller number. So you can either pay $8,000 a year for health insurance coverage, or you could pay $2,000 in taxes and have your insurance and your healthcare coverage done for you. And, people are just so against paying more taxes that they don't understand how all of that works. Very similar to like Social Security here in the US, where people are paying into Social Security. We don't have a choice. We're paying into it. But the returns on that investment for Social Security is like 1/10 of what you would get a return on if you just put that money into the S&P 500. So people don't understand that, because they're like, well, that's my money. I go, well, yeah, but if the government just stopped taking your money and you put that money into the stock market instead, then you would have much better returns and a much better opportunity to retire when you got older than you would by living off of Social Security. So, people just don't understand that concept because they're so ingrained in their head that they need this Social Security because they won't be able to retire without it because they don't understand investing. And even if it was like, hey, maybe if the government instead took that money and invested it in the S&P 500 like it was a 401k, if they did that for us, cool. Then I can, get significantly better returns on that money in the end. But right now you're at a point where the government's obviously doing something with that money that they shouldn't be doing with, and they're spending it in places that are not going back to Social Security, and they're not investing it wisely because they're giving us such shitty returns. Is very just frustrating as to how they're mishandling our money, and the American public doesn't fully understand and grasp what's transpiring. Lang, I was in the USA from 1980 to 1994. Ex-husband was a Navy officer. He um, doubled insured for decades after retirement. High deductible and many high extra cost surgery. Yeah, yeah, it's so sad how much people have to pay. And somebody else had posted, I saw today, number of bankruptcies that were filed based upon healthcare costs, and like every country out there is zero, and the United States has like hundreds of thousands. It's disgusting. Yes, Canadian, Australian, where you don't go bankrupt. Just yeah, exactly. That exactly what I was just saying. Going bankrupt because you got sick, or any sort of illness or some issues. It's like it's not even cool. Like it drives me insane that I have to have $15,000 put aside into this HSA account just in case something happens for me. We're gonna retire to Thailand. So actually, so I've been looking at buying real estate around the world, and my plan for the next 5 years. I did my manifest list through 2030, and I'm going to be buying real estate. The plan is to buy a house out in Kansas City where my son is at for college. Another house next on the list would be down in either southern Florida or in Puerto Rico. And then I'm looking at potentially a condo up in New Hampshire where I like to go hiking. And then I want to get a castle or a villa in Italy. I've also been looking at Thailand, Philippines, places like that as well to buy real estate. I want to buy real estate all around the world. There's another place somebody had introduced me to, is Land of Land auctions. And it takes some time because it's basically like called like eBay, but for land. And you just kind of auction it off, and you can go buy land for relatively cheap. But obviously, you want to do the research on it. Is the land buildable? What's going on? I haven't had the time to go through that, and I don't have the money right now to invest in that land. But it's on my radar, and that's only U.S. based. But I would like to go buy some property around the world. And obviously, as time goes on, we'll keep on chatting. And for you guys who are around the world, we'll talk. I'd love to buy property, or if you can, in certain areas. Like I know places like Thailand, you can't buy the land, but you can lease it for 50 years and then just renew the lease after 50 years or whatever. And you can own whatever's on that land. If you put a building or a structure up, you can own that, but you can't own the land itself. So I know there's a lot of different places like that. But it'd be interesting, and I wouldn't mind having that, especially as something I could pass on from generation to generation for myself. Is who knows what's going to happen with the global landscape? But if I can have different properties around the world for my future generations to take advantage of, however things play out. Yeah, so we can retire half-time or full-time in Thailand. Yeah, and the cost of living is so much lower. That is a little secret that a lot of people don't understand. Is even doing it town to town here in the US, and I'm sure in other countries you can do it as well, is if you can work in a higher end town where, the cost of living is higher, so you can get paid more, but live, not too far away, but maybe you're a half an hour or an hour away from work, but the cost of living is significantly lower, the dollar you're earning is going to buy you a lot more elsewhere. So for instance, if you're living off of dividends, if you've got dividends coming in, dividends don't care where you live. There is no cost of living other than on a national level when it comes to those dividends. So you're getting that same dollar in. So I can get those same dollars from my dividends living in Connecticut, but I can't afford as much as if I was living in a place like Florida, where the cost of living is significantly lower, depending on where you are in Florida. Or I can go to like Georgia, or there's a bunch of states down south, or you can go to a Thailand where the cost of living is significantly lower. It's like pennies on the dollar. So, I could be bringing in $30,000 a year with dividends. I can live, fully retired over in Thailand. Whereas here in the US, I'd still have to work part-time if I was bringing in that kind of dividend money. So, it's a little trick that, people can learn is, start to earn some wealth in higher income areas, and then you can go retire to a lower income area. It's why people here in the US, a lot of people from like New England area will end up retiring down to Florida because they made New England money, but they're living in, Florida cost of living to retire. Let's see. Uh, let's see. Oh, Singapore citizens forced to contribute percentage of wage into their own personal health account, create personal responsible spend. Yeah. So like for me, I put it into an HSA. So it sounds like it's very much like an HSA account that I have, where I pay a very small amount. It's like $35 a week into this for the insurance piece of it, and then I can contribute up to a certain dollar amount. And I was putting in $60 a week, and I've cut that down so I could put more into my IRA. But I was putting in $60 a week into basically a tax-free retirement account, but I could take that money out and use it for healthcare stuff. I just wish I could use that for, personal health, like getting a gym membership. If I could use it towards my gym membership, if I could use it towards healthy food, if I could use it towards any of the supplements I use that I'm getting for my workouts, I would love to be able to use that money for that because I'm doing it to prevent any issues with my health. So, sounds like Singapore is a little bit on that page, but they're doing it in a much better way. Yeah, Lang, yeah, yeah. One is quite popular to many foreigners. Yeah, and I've looked at a few areas in Thailand to go to, and obviously, just like any other country, there's some good areas and some bad areas. Yeah, and the Thailand doesn't allow the foreigners to own the land 100%. Yeah, yeah. So you can buy the apartments and condos, and yeah, that was that. I think Philippines is the same way. Um, who else was over there? Indonesia. One of them, I think you could actually own the land. Or Indonesia, you could go there, but you had to spend over like $150,000 minimum. I think that's what it was. Or you had to spend a certain amount of money to be able to buy land over there. But yeah, that's lots of different foreign rules. Just like in Italy, I can go and buy whatever I want. I don't have to be a citizen over there. I just can't live there. So to get the citizenship is a lot of extra work. I tried to look into it, trying to get a citizenship through my grandfather, but because of the timing of when he moved to the U.S., I don't qualify for the easy way in to get dual citizenship. So I could buy land and I can stay there. But it's basically like a green card. So I'd have a limited amount of time and then I'd have to leave and then come back. Um, so lots of different rules around the world, but it's very interesting to learn all of these things. And I did start learning Italian again. I had been doing it for a while, and I just decided to do it. And I'm like, well, if I'm gonna be buying a place over there, I want to learn the language so I can actually speak it when I'm trying to buy this, and understand what's going on. So that's my goal, is to start learning some new languages. And Italian is the first one on my list. Maybe I could have done like Spanish because I deal a lot of Spanish speaking customers at my job, and learning Italian after Spanish really isn't that bad because it's a Romance language. But I went with Italian first, so whatever. I'm having fun with it. I've also started reading. So I'm not usually a book reader. I'm usually more of an audiobook or some sort of video content. Like I'll watch YouTube videos to get in my knowledge because it's very important to do, consume knowledge as well. But I got rule number one. The book Rule Number One about investing. So I started reading that. It's pretty good so far. So if you guys are interested in any books to read, it's Rule Number One by Chris Town. His guy's last name is Town. I can't remember his first name. But very good book so far. Highly recommend it so far. And I'll keep you guys posted on how I go from there. The other book that I'm listening to on Audible right now is Quitter by John Acuff, and it's talking about how, transitioning from your day job to, living on your own, whether it's, doing whatever you want to do to live your dream, living off of dividends, whatever it is, and kind of going through that transition of, how you're going to pay the bills and the things that you should do, and how you shouldn't quit right away because there's a whole different variety of stresses that you're going to have when you quit your job. And just kind of going to understand how people transition from a job to living an independent, uh, wealth freedom lifestyle and being able to do this all on your own. So I'm doing both books at the same time. So it's very good. I'm glad I'm making these choices to consume good stuff to improve myself. So learning Italian, learning about the investing with rule number one, improving my focus for the future when it comes to the quitter, doing my manifest list through 2030. I always like to do that because my ex father in law would always ask me, "What's your 5 and 10 year plan?" And at the time, it didn't really settle with me and like fully understand what he meant by that. But as time went on, I've understood it more and more. And now that's where I come up with, well, here's my 5 and 10 year plan. I've got my manifest list out. So I've got, well, how much can I build up my portfolio? How much can I build up my real estate? What do I need to do to get to those things? What actions do I need to take to get to that point where I want to be able to retire in 5 years? And so coming up with a manifest list is how I come up with my 5 to 10 year plan. And nothing is set in stone, but it's these little milestones and goals along the way to hit. I try to obviously hit them faster than I set, and I don't want to set the bar too low. I want to definitely challenge myself to push myself, but it's one of those things where by kind of setting these goals, it's improved me. Like I started doing this last year, and I've hit almost every one of the manifests that I did that I set for myself in 2024. I even moved the goalposts out a little bit because I was doing so well in November that I wanted to push them out, which was able to push out all of my goals through 2030. So highly recommend doing all of that. But yeah, just doing all of these little things, and then obviously working out. I work out on a daily basis. Um, so I highly recommend just taking actions and making choices in your life that are going to improve who you are as a human. Whether it's going to be from your health to your wealth to relationships that you build, skill sets that you've got for yourself, whatever it is. Highly recommend it. Let me see. Warren Redlick married a Thai lady. She's attractive, has MVA, lucky guy. Well, I mean, Warren, Warren's a super smart guy. He was a lawyer, you know, very well to do, took care of himself, So I mean, good for him. I mean, I wouldn't mind it. I'd go out there. I have, if I could meet someone like that, I'd be all for it. Right now I'm still just single, so I'm doing my thing. And hey, if I meet somebody great, I dabble in online dating, but it's kind of gotten so junky that it's not really doing much for me anymore. So I think I'm going to go back to doing my thing and just wait for somebody to cross my path and go from there. Oh yes, and Thai food. I love Thai food also. What's going on, Sal? All right, let's jump into some other stocks. I'm going to get off shortly here, but as I said, I will go through a few of these things. So ACHR, that was on the list. So let me bring that up for you guys here. Um, And again, as I said before, a lot of these here, I'm not going to be able to actually take a look at the company itself. I won't have time to do it on here, but I can take a quick look at the charts and see what's going on to give you some analysis. So RSI, it's right in the middle right now. Obviously, you saw a sell-off. It's kind of creating this giant bull pennant right now. So it may break out. It's setting itself up for a potential breakout based off of this. Um, a little bit of a gap here, not too much. It looks like it tried to fill um, down here at the 622 level, but otherwise, it's on this. It looks like it's on a giant momentum swing. Um, but it looks like it was at a peak before, came crashing down. Da, da, da. So it looks like it kind of goes through these cycles. But $7. Yeah, I'd have to do a little deeper diving into what the stock is all about, but it looks like it definitely swings up and down significantly. And then now it looks like it's at least the top of where it was previously, hitting 984 at that level. So definitely a giant momentum boost after after the election here, coming back down. So it seems like it's just following trend with a lot of those post-election moves. Let me see what else we've got here. There's a few others that you guys had asked about. There is LANC, Lancaster. Let me see here. Oops. So Lancaster, this one here, ooh, I'd have to take a look. What is this giant drop here? But that gap got filled. So this giant gap here that got filled. It's probably, I'm guessing that was probably a bad earnings report, if anything. So massive volume pushing that down. Yeah, I'd have to do some research on this one deeper. Looking at charts here at the double top, which caused that sell off. The giant gap down, which that gap has now been filled. This created a gap up after the election, then it sold off. Now screaming back up. So this basically hit almost a double bottom, pushing back up here. So this one may have a little more room to run for anybody who's paying attention to LANC, pushing a little bit higher on the RSI here. But yeah, this may have a little more room to run, but I'd be paying attention to if it's going to hit a double top here. So I'd see what's going on at that 200 to 201 level. You know, we're kind of getting close to it now. So see where it's at around that $200 level. And if we can break it and keep pushing up, then it may go higher. Let's see. ES was another one. Oh, Eversource. Oh, God. I don't even want to invest in Eversource. They're like the worst. I can't stand them. That's the energy company here that we deal with. I actually didn't even know that they were publicly traded. They just piss me off because they're just money grabbers. It doesn't even make sense. Like here in at least here in Connecticut, we've got options for different energy people. So like you can go town by town. Like a couple of towns have their own energy electric company. And in those towns, the electric bill is super, super low. But then anybody that has Eversource, which supposedly has the best resources and all the best stuff, is like 4 times more expensive. Like, why? Why is it 4 times more expensive? And they just keep on throwing out all these fake costs and fees. And it's almost like dealing with Ticketmaster, where you have all these different fees that are like, well, you're just throwing shit on there and it doesn't even make sense. And then, you know, people can't even afford electricity and all this. It's absolutely maddening. So I have no interest in investing in a company like that because they're jerks. But just looking at the stock itself, you know, obviously bouncing down like this, they're bouncing down. I would hold on to this one and see what's going on. Just because they're like, this is a giant dead cat bounce that they're on. So I don't know if there's another bounce that's coming down, but yeah, this is not one that I would get into anytime soon. You know, if it's a company you like and you want to play energy, you know, maybe you start a dollar cost averaging at this point and follow it as it is. But otherwise, I mean, look at the RSI, it's down to 36. So getting closer to a buy zone here. So, you know, if it's something you guys want, go ahead, but it's not a play I'm going to get into. Oh, sorry, I wasn't even sharing it with you guys. Yeah, there, dead cat bounce. But yeah, nothing I really want to get into on that one. What's your views on Palantir? Too high a PE ratio? Yes and no. Very similar to, I'll bring that one up here as well. So it's very similar to Tesla for me, whereas I think the long-term potential of the company is outstanding. And even buying at levels where you're at right now, if you're going to hold it for, you know, 10 years plus, I think you're going to do very well with, and you'll be perfectly fine. However, I think we've gotten relatively frothy. I mean, look at this. The PE forecast, 194, looking at the 370 PE, super, super frothy. Looking at the gaps we have, you know, so many made down to 42, down to 31, down to 24. I think we have a gap that goes all the way down to $14, 17 there. Yeah, 14.96. So, you know, I think there's even one that goes down to 10. Oh, 8, 7, almost $8 here, you know, just under $8. So whether we get down to this level or not, I mean, that's basically a 90% drawdown on this. I think they've done a good enough job for themselves. We won't get down that low. 14, $15, that's a potential that might get filled. You know, some of these down here down to 18, we pushed up super high, super fast, and very similar to Tesla in 2020 and 2021. I think we're kind of facing a point right now where there's so much future earnings pulled forward into the stock that it's either going to trade sideways for, you know, 4 or 5 years, or we're going to see a massive sell-off to kind of bring it back down to reality and then, you know, build back up from there. So those are my thoughts on Palantir. Again, I own the company. I sold 2 shares off recently. I only owned 11 shares, but what I did was I put in a 1% stop or a 4% stop loss, and it got triggered. And then it bounced back up again. I put in another 4% stop loss. I'm up, I think it's like 200% on this. My cost basis is $20. So I'm way, way up on this. So I'm really not concerned. I basically got my money back that I've invested into the stock. And now I'll just ride it from here. I'm back at the point where if it dips down to like the $58 level, I'll add again. I'll add one more share to it. But I think it's going to be great long term. But adding at these levels, I think is just be cautious. I think this right now for Palantir is very similar to adding to Tesla at 414 when it hit it the first time. So just be cautious because you could very well get into that situation with Palantir where you buy it at 74 bucks and you're waiting 4 more years for it to come back to $74. VST, private utility company, keep going up this year. Let's take a look at VST. Take a look at a couple more and then I'll jump off so I can get to bed. But let's see here. VST. Oh, let me go to actually where we're at right now. A couple of gaps here. Looks like September they may have had, I don't know if that was earnings or what that was. Then after election, it jumped up as well. A little bit of a sell-off here, probably some profit taking going on. Yeah, looking at the chart itself, where it's at right now, seems like it's pretty solid. RSI is right in the middle. So, without diving into the actual financials of the company itself to see what's going on and see what they actually do, well, they pay a dividend too. That's nice. So without diving in, knowing energy and what energy, energy companies are typically something that investors get into when you're potentially getting into a recession, which we might get next year. And under Trump, I believe energy should do relatively well. So could be something to take a look at as a potential for next year. Maybe start a dollar cost average, just kind of keep an eye on it. But I would just pay attention to these two gaps right here and see what's going on, see if we get a pullback down to there. But otherwise, I mean, just looking at the charts itself, looks like it was consolidating here and then broke down. So we may start another new consolidation around this $145 level here. Seems like based upon here, it was a point where it kind of bounced here. So it looks like it was a good solid resistance level and then became a good support level. So 145 is probably that level where you're going to consolidate and it'll be a battleground area for this stock. All right, let me see. I did this one. Let me see. BST. I'm going through my list right now that you guys have given to me. All right, got one more to do. Let me see. LECO, Lincoln Electric. Oh, looks like a lot of these were the energy companies. Yeah, and this is actually something to look into is the energy stuff as I was talking about before. So this one here, giant gap up, filled that gap, made that giant bull flag, jumped back up, making another giant bull flag. So this one here could be priming for another jump, just like we saw here. Where it's going to go from here, I don't know. But, I mean, it's textbook bull pennant, and you got the bullish jump. Now we're creating another bull pennant. So the question is going to be, are we going to get that same jump again? Or is this just going to consolidate sideways or break down? Because bull pennant doesn't mean you're going to get it, but it's typically, hey, you come down this level, now you break out. But it could be a fake out breakout, like this broke out after 3 days and then it started to come back down again. Obviously it created a gap here. It filled that gap. So yeah, I'd pay attention to this. See, it's priming itself for a big move one way or the other. Based upon the chart, looks like it should be a move upward, but don't know for sure. You are most welcome. All right, guys, that's all I've got for you guys. Gonna get myself off to bed right now. Awesome as always. And with Tesla coming back and the way the algorithm goes for the channel and everything, I'm going to be doing what I've been doing, dividend stocks, entire broad-based market stuff, but I am going to start doing more Tesla stuff. So I will come out. I'm going to be doing the Tesla Tuesdays as per usual. I'll go work on doing a second video every week for Tesla as well. Maybe doing like a recap of some sort. Maybe I'll do one that's based upon news and one that's based upon the stock. I haven't figured it out yet. I'll work it out over time. And then obviously on the live stream, we'll talk about everything, including Tesla as well. So I'll work on 2 to 3 days a week. We're going to be discussing Tesla. And 2 days a week or so, we're going to be discussing broad market stuff, and other things are going to go on as well. So more all encompassing. And then, as I said, I'll work on the next couple of months to get out another one of those retirement videos, which were always fun to do. And I'll start to try to get back to working on a valuation model again. So very exciting times for Tesla. Again, I think we could have a questionable time in the market if we get to a recession, which, hey, we've been through tough times before. When 2022, we'll get through it again, and we'll discuss it, and hopefully that'll be a great opportunity to buy, and we'll get through that as well. But going forward, we'll add a little more Tesla to this, and I think we're going to have a lot of fun and get back to it all. So thank you guys so much for watching. Love spending time with you guys. Have a great one. Check you out later.